Good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, November 24th. Finally got a trade off. It's been pretty quiet lately, especially heading into the Thanksgiving holiday here in the States. We did have one trade, picked up 6.2 pips, as you'll see there. First, just want to talk about some economic news that came out. Kind of a busy calendar this morning. Actually, before the economic news, just want to point out the 2-year bonds in Germany are yielding close to a negative 0.5%. So they're currently yielding negative 0.4%. And that's just unbelievable. Here in the States, U.S. gross domestic product, the first revision was annualized to 2.1%. Came in as estimated. It's going to be revised again. That's the first revision for annualized. So the government is claiming that we're growing at 2.1%, which is not great. Horrible would be negative growth, right? So it's anemic growth. Let's say that. If one thing about that GDP number, third quarter inventories rose from 62.2 billion to 100.6 billion. Literally just a month ago, they were saying, economists were saying that inventories were starting to be written down by corporations. So this was a surprise that companies are building up their inventories. And the economists thought that they'd be building up by 62.2 billion, although that would be actually writing some down. But they actually put out 100.6 billion. If you were to back that out, if they weren't growing their inventory, why they're growing their inventory, I have no idea. And we'll touch base on that in a second. But if they didn't grow their inventory, GDP would have just been 1.2% annualized. So you have to question, why are they growing their inventory? And we ask because later this morning, personal consumption came out worse than expected, and consumer confidence tumbled to a reading of 90.4. Was supposed to come in with a reading of 99.5. The decline in consumer confidence was mainly due to a less favorable view of the job market. Amazingly, the government is telling us that unemployment's at 5%, which is close to full employment. Full employment, we consider full employment, a hair under 4%. So the government is telling us that people are working and everything's all rosy, yet consumer confidence absolutely tumbles and personal consumption misses target. So if consumer confidence is tumbling, personal consumption is lower than expected, why are companies building up inventory? Beyond me. I don't know. We've been expecting to see companies writing down that inventory, but maybe they're seeing things that we don't know. Maybe they think people are going to start a buying frenzy because the Fed's going to start raising rates in December and probably raise rates throughout all of 2016. So they might want to get their purchases in now. Maybe that's what CEOs of large companies are thinking. I don't know. Haven't come across anything. Haven't read anything. That would just be my assumption. Case-Shiller, which is the go-to home index, rose at the fastest pace in 6 months. Sounds great by headline, but that is despite the National Association of Realtors reporting falling prices. So here we know from other housing indexes, National Association of Realtors is reporting falling prices. You have existing home sales, terrible. You have new home sales, terrible. You just had the National Association of Home Builders, last week, come out with a terrible, terrible reading. Case-Shiller now says its prices are growing at the fastest pace in 6 months. Can't be, right? So obviously the Case-Shiller, it's either lagging or something is wrong with their model. Because if you have the National Association of Realtors reporting that prices are falling, and yet Case-Shiller is saying prices are rising at the fastest pace, how can it be? It can't be, right? So National Association of Realtors, I would hope they have a little bit better grasp on it than the Case-Shiller, although the Case-Shiller index which was developed by Mr. Case and Mr. Schiller, is supposed to be the go-to index when coming to housing. But then you look at all the others, like we just mentioned, the other 3 or 4 components of real estate are all terrible. So Case Schiller is the only one that's trying to be somewhat supportive to housing. We've been negative on housing. We are still negative. View hasn't changed of that. One other thing that came out this morning was Richmond Fed manufacturing came out. Third monthly decline in a row. Wages crashed most in 4 years. Probably not big of a surprise. We don't do a whole lot of manufacturing here in America. With the economy so weak, the little bit of manufacturing we are doing is obviously slowing down and getting worse. So I don't know if it's a big surprise, but it did come out with third month in a row with declines. And like I said, the wages crashed most in 4 years. So not a good sign if you're in manufacturing, if your business is anything involved with manufacturing. So let's get to our trade. We had the one trade here, which I said we pulled out 6.2 pips. Was a short in US dollar Japanese yen. We had 30% of our normal size. We were actually short it last night. We were hoping to be able to piece out of it. Unfortunately, the move didn't come until after we shut things down for the evening. Actually, the move didn't come until about 3 o'clock in the morning. Obviously, we weren't in the office. We did throw in a bid to cover 122.520 for. We were figuring right around 20 pips. We actually got filled 122.520. So we picked up 20.9 pips, or size adjusted 6.2 pips. You can see what it did. It went right through where we were trying to cover. It went all the way down to 122.40. It would have been nice to be able to piece out of this if this move had happened while we were still in front of the computer, because these are the moves that we like. You know, we could have picked up maybe 10 or 15 on the first piece, 20, 25 on the second piece, and then this third piece, you know, maybe capture some of close to all of this, you know, or somewhere around where we did cover, or even look, it even came down again after this brief little bounce. It came back down all the way down to 122.35. So would have been nice. Unfortunately, that wasn't the case. So that's it. We're going to wrap it up. Not sure if we're going to be trading tomorrow with the way the market's been so slow. The day before Thanksgiving is notoriously slow. It's one of the busiest travel days of the year. So many people do take off and are off their desks. So we'll see. We'll come in. We'll see what's going on. See if there's any breaking news or if markets are moving much. If not, we'll send out an email. We'll see what we're going to do. Obviously, Thursday we won't be trading, and then Friday we won't be trading either, as that will be a very, very slow day. So that's it. We're going to wrap it up. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And have a great rest of your day. If we don't trade tomorrow, we won't be doing a video until either Friday or Monday, most likely just until Monday. So if that's the case, have a great Thanksgiving holiday, and we'll see you next time. Have a great rest of your day.